In this part, and this is the last part of chapter 1, we will be talking about the financial statements. Basically, under GAAP, companies are required to publish 4 main financial statements, and those are simply income statement, retained earnings statement, the balance sheet, and the statement of cash flows. We will talk about them now, and we will be talking about them during the semester. Most of the time we'll be talking about the first 3 of them. The last one, statement of cash flows, we will be discussing that in details in a later chapter during the semester. So to start, the first one that we always start with is the income statement. And the income statement reports the success or profitability of the company's operations over a specific period of time. Basically, it lists the revenues and the expenses of the company. It's all the revenues minus all the expenses, and that will give us the net income or net loss. In cases where we have more revenues than expenses, we'll end up with net income. When we have more expenses than revenues, we have a net loss. Now, as you can see here, the first line is always the name of the company. The second one is the name of the statement. It's which statement we are talking about. The last one states the period of time for which this income statement was prepared. Those are the 3 lines that are at the beginning. And as we mentioned, the income statement is prepared over a certain period of time, whether it was a month, a year, a quarter. It always said, if it were, for example, a year, it would say for the year ended 2013. Once we have prepared the income statement, we can take advantage of the number here in order to add it to the retained earning statement and to prepare the retained earning statement. Basically, the retained earning statement, what it reports is the changes in retained earnings for a specific period of time. This period of time is usually the same as the period that was covered by the income statement, and this is why we are able to take the net income that was calculated in the income statement, and we use it in order to prepare the retained earnings statement. The way we do it is we start with the beginning balance, retained earnings beginning balance, we add net income, we subtract the dividend, and then we end up with the retained earnings at the ending period. Now, once again, we have here the name of the company, the statement, and the period that was covered. This is, as you can see, is the same as a period that was covered in the income statement. Now, after that, we get to the balance sheet. So the number here, the retained earnings ending balance, we can use it in order to prepare the stockholders' equity section and the balance sheet. So the balance sheet is also called the statement of financial position, and it's like a snapshot of the accounts of the balances of these accounts at a specific point in time. So basically, this is not for a period of time, it's for a specific date, and this is why, as you can see here, it says October 31st. It doesn't say month ended October 31st or something like that. And basically, it is a list of these accounts that are on the in the accounting equation. We start with assets, so we always start with assets. The second, and then we include the liabilities and stockholders' equity. And as you can see here, the total assets must always be equal to total liabilities and stockholders' equity. Now, this number here, the balance in cash, is the same. It is supposed to be the same as the cash at the end of the period. That is basically that we find at the end of the statement of cash flows. The statement of cash flows basically describes the cash inflows and cash outflow. Those are cash receipts and cash payments, and we only care in this case about cash receipts and cash payments. And it helps us answer questions such as, for example, who did we pay for, where did the money come from, etc. At this point in the course, we need to know that the statement of cash flows basically has three parts. The first one is net. The first part is cash flows from operating activities. The second one is cash flow from investing activities. And the third one is cash flow from financing activities. We will be covering the statement of cash flows in more details at the end of this course. Now we will solve a couple of problems that will help us better understand what we have been covering so far in this chapter. So the first problem is a very simple one. It is asking us to calculate the total assets of the company based on a list of accounts and their balances. When we are asked to do something like that, we check them one by one to see whether they are assets, liabilities, or stockholders' equity accounts. So in this case, we start by looking at the first one. The first one is advertising expenses. Now, are these advertising expenses? Is it an asset account? No, this is stockholders' equity account, so we do not count it. Cash? Yes, it is. Accounts payable? It's liability. Rent expense? Stockholders' equity account. Service revenue? Stockholders' equity account. Supplies? That's an asset. Dividends, stockholders' equities account. Then we have accounts receivable and equipment. Those are assets. So total assets would be equal to 7,700 plus 500 plus 400 plus 6,000, and that would be equal to 14,600. That's C. Now this problem is or might be similar to the kind of problems that you might get in the exam. This problem is a typical exam problem where they would ask you to calculate the net income or the net loss. And the way to think about it, we should think about it in a general way. So first, we need to start thinking about stockholders' equity and break it down into its components. So stockholders' equity end of 2014 is equal to common stocks and 2014 plus retained earnings ending 2014. Now we can think about common stocks at the end of 2014 as common stocks, the value of common stocks at the beginning of 2014 and whatever common stocks was issued in 2014. So this one would be equal to common stocks beginning 2014 plus common stocks during the year 2014. Retained earnings, on the other hand, can be calculated or broken down in the same way that we saw in the retained earnings statement. So the retained earnings statement would say that it's retained earnings beginning balance plus you add net income less dividend of that year. Those three are equal to the retained earnings ending balance, and those two are equal to the common stock ending balance. Now let's rearrange those numbers a little bit. So let's have here common stock beginning 2014 plus retained earnings beginning 2014, and then we continue. We put the remaining ones plus common stock in 2014 plus net income minus dividends. Now those two are equal to stockholders' equity beginning 2014 plus common stocks 2014 plus net income minus dividend, and that would be stockholders' equity equaling 2014. So if we plug the numbers here, let's plug in the numbers, that would give us 360,000 are equal to 270,000 plus 0, as they did not tell us anything about any stocks that were issued during this year, plus net income minus dividend, which was 30,000. That would give us net income is equal to 120,000, and that would be C. Now this problem also can be solved using the same equation that we used in the previous problem. Here they are asking us to calculate the dividends. So on October 1st, Smithco reported stockholders' equity of 110,000. During the month of October, the company issued common stock of 15,000 and declared a net loss of 8,000. If stockholders' equity at October 31st totals 110,000, what amount of dividends were paid during the month? So we start by writing the same equation. That was stockholders' equity ending at the end of October is equal to stockholders' equity beginning of October plus any common stock that was issued during October minus net loss, because we have here a net loss, minus dividends. Let's plug in the numbers. We have 110,000 is equal to 110,000 plus 15,000 of common stock minus net loss of 8,000 minus dividend. So if we move dividend to the side, it is equal to 100,000 minus 110,000 plus 15,000 minus 8,000, and the answer would be 7,000. That would be D. As you can see, it is very easy to understand. Once we understand how this formula was derived, we can easily use it to calculate common stocks that were issued during that month. We can use it to calculate net income or net loss during that month.